Hello, and thank you for tuning into the Art of SBA Lending. Today on the podcast, we have the president of VelocitySBA, Charles Rowe. VelocitySBA is a non-bank lending company solely focused in SBA 7A lending. They've been ramping up steadily, and they've built a very solid team and are well-poised to continue to grow in 2023 and beyond. So tune in to hear more about Charles's background as a GE Capital alum and the story of VelocitySBA, including the origin of its name, and hear us talk a little shop about the back end of creating an SBLC. Stick around. Let me just start by saying it is nice to meet you for the first time. This is the first time I'm meeting you. Thank you so much for doing this.
No, this is great. Great to be here and chatting with you.
Yeah, no, I'm super interested in talking to you because you're the president of VelocitySBA. That's one of the 14 SBLCs, right?
Correct. We obtained our license back in 2015.
That's 14 for now.
Yeah.
Are you pro or anti more licenses?
Well, I am, I guess it really depends. I think the moratorium that's being considered to be lifted is maybe an opportune time for SBA to consider some additional non-bank lenders. I think, but for the most part, I think the SBA does have to be careful and who gets selected. It's a pretty rigorous process to apply for an SBLC license historically. And I'm assuming that they're going to continue that tradition and vet the potential lenders out. I think the industry certainly could use some additional lenders, whether it's in the bank or non-bank space. Credit is always needed by the small business community, and more competition or more lenders supporting that industry is always a good thing. But I do feel that there has to be sound oversight to any new entrants who are coming in.
Yeah, no, that's actually a pretty measured stance. I know, like, based on the comment period, it was, I think, unanimously anti from the industry to creating new licenses, but I feel like people are getting it mixed up. I feel like they're combining the idea of fintechs getting into the industry and new licenses.
Right.
If you create new licenses, that doesn't necessarily mean the fintechs are going to get the licenses. And what even is a fintech right now? Because we're all using technology and we're all financial. So it's a really complicated issue. I agree. Like, the more access to capital for small business owners, the better. So that's one stance, right? And then the other stance is don't commit fraud. Like, I don't know why people are getting it confused.
Yeah, I think, well, if you think about the SBA program itself, it is a regulated program, right, by the U.S. Small Business Administration. When it comes to non-bank lenders, we are regulated. For banks, obviously, they have their regulatory agencies. The question, I think, that surrounded the additional licenses being issued was, well, who are these licenses going to be issued to? And there was a lot of talk that these licenses were going to be issued to fintechs who have operated really in an unregulated space. And so when you have a regulated space like the SBA program, and all of a sudden you hear about entrants coming in who have operated outside of that space and may somewhat disrupt that environment, I think that was a key cause of concern for most lenders out there, right? If truly the new licenses are going to fintechs, are they going to be successfully operating under the regulated environment? And would they be regulated no differently than any other existing lenders, whether it's a bank or a non-bank?
Right. And the SBA has their hands full, just regulating the 14, right? So
exactly.
I understand. Right. I understand the concern. So how did this whole thing come about? How did Velocity come about?
Velocity really came about 2015. Our investors at that point had looked at a variety of different lending programs. Our investors were also participating in another finance entity who was really heavily involved in a state guarantee program called CalCap within the state of California. So they understood the value of guarantee type of lending, and they essentially went looking for ability to operate at a nationwide level. The CalCap program is a great program. Our sister company on that side of it has been consistently the number one CalCap lender for state of California for a number of years. We wanted to be nationwide. We wanted to offer additional product capability, and hence they went looking for a license that would be able to provide that nationwide coverage, and came across the SBLC license and decided that would be a good fit for the business going forward.
When you say like the investors, is it like individuals or is it like institutional investors?
Yeah, so we're very unique compared to other SBLCs, is that we are owned and operated by private investors and not institutional. We're not a private equity-backed hedge fund. So our investors have really a strategic long-term plan for any businesses that they go into. And reality is, we have a tremendously competent board with investors, part of that board, who have a long-term strategic focus.
So what is the vision for Velocity?
A vision for Velocity SBA is simple in that we want to be the premier SBA lender, providing access to capital to small business owners, and we want to do that in a prudent, strategic, measured way. We're not here owned by a short-term investor base, meaning they're in it for 4 or 5 years, typical private equity type of time frame. Our investors are very strategic, long-term focus. They are looking at Velocity SBA to be a long-term player in the business, and hence we're very well capitalized. We have a long-term plan to be a stable lender in this space going forward. There's really no exit strategy for the investors, meaning we're in it for 4 years and we're going to exit and sell the business. They're here to really provide long-term guidance, long-term capital support to grow the business and be a long-term player in the SBA lending space.
Yeah, you've made that point a couple of times. Is that common in the SBA world for people to do it with like a 5-year exit plan, set up a shop?
Well, I think whether it's SBA or whether it's any other industry, typically when you have institutional money coming in, they do have this 4 or 5 year window, right, where they want the return and typically exit that business. But reality is that's not who we're owned by. And as a result, everything we do and all the businesses that are currently held by our investors have a very long-term strategic plan with no immediate exit strategy incorporated into that.
Do you think it's even possible for an SBA lender to create something like this and have an exit? Because I feel like with most of the business models being BDO centric for originations, how does somebody buy them and then keep the BDOs there? You have to almost have full turnover, which is like, then what are you even buying?
Right. So, any value of a company, if you're talking about whether it's SBA or non-SBA, and I'm specifically referring to financial institutions, right? So the value of that company is really your value to originate and manage the paper, right? Because at the end of the day, a lending company is a risk organization. So number one is you have to have a great origination shop. You have to have a great credit shop to manage that portfolio. But reality is, if you're not originating paper, then it just comes down to the value of the portfolio and the future income stream. But if you have a robust origination shop that's proven, continues to originate and add value to the business, then that becomes ultimately a significant value for future potential investors as well.
Are you aware of any SBLC like founders who've had a successful exit in the past like 10 or 15 years? I feel like all of them, like the licenses just became available because the lenders just didn't really work out. Like, CIT, for example, right? They just, I was at ReadyCap. We bought the CIT license and I'm pretty sure I mean, I don't know the details, but I'm pretty sure we paid basically for the license and the portfolio. And I'm pretty sure all the people came with it, but It wasn't like some sort of multiple on cash flow or anything like that.
Yeah, so like I said, I think the key component, you have really two ways to acquire an SBLC license, or two opportunities that typically surface. One is, unfortunately, if you're in a situation where your portfolio is not performing well, you're in violation of SBA regs, and you are essentially forced to sell the license by your regulatory agency. In a scenario like that, you're obviously not going to get the significant value that may reside in your portfolio or your current shop. But if you have a successful operation, and like I said, if you have the ability to continue and perform an historically proven origination shop, and continues to add to your portfolio and generate income, then there becomes a multiple of that, right? So there is significant value to that. And that's not just for an SBA lender, that's for any lender, quite frankly.
Okay.
Right? So there have been successful exits. If you think about, if you rewind a number of years ago, if you look at a company that most SBA lenders who's been in the industry for quite some time will recognize the company name Money Store, right? They were sold for quite a bit of multiple to a bank. And so there has been successful exits. There's been not so successful exits. But reality, I think, where you look at some of the unsuccessful exit, if you will, is really was forced by the SBA. And or the second reason was that they just didn't have the sufficient capital, because any financial lending institution, you constantly need capital. Right? If you're growing your book, you're going to need capital. It doesn't matter how profitable you are. Yes, profits definitely help with the capital situation, but as you continue to grow and scale the business, there's going to be triggers for capital that's going to be needed. And you have had smaller SBLCs in the past where they had individual investors who just didn't have the pockets, the deep pockets to continue to support the business.
Yeah, it's tough because on one hand, if you had individual investors, you don't have the, pressure of like a private equity type institutional investor, and them wanting their profits and whatnot,
Sure.
right?
Yeah, right.
But if you go individual, right, then you don't have the deep pockets and the you're not as well capitalized.
Right.
That's why I liked GE and CIT were kind of unique, right? Because those were two I felt very successful ventures before 2008, where it was these large companies that had their own culture and various divisions, well capitalized, that got their hands on the license and were able to create some pretty industry changing programs at the time. And you worked for one of them, right?
Right. Yeah, I was at GE Capital for nearly 20 years. Phenomenal company, really just unbelievably well ran. And you're absolutely right. GE Capital was one of the successful SBA lenders. We had acquired the license, I believe, from back in the ITT days, and ran that license very, very successfully. And ultimately, we sold that. When I was there, we actually sold that license to Waterfall, who ultimately used that license to start ReadyCap. The reason why GE Capital was successful was not only because of capital, but you had great management, you had great strategic plans there that was long-term focus, and they just were able to really execute phenomenally well. But GE Capital did an amazing job of training their staff, really developing talent and recognizing talent. And that, I think, was one of the key success of not only GE's SBA business, but really many other businesses.
I'm glad you said that, because I do think that what you just said hit the nail on the head. The training and that GE corporate type of structure management training made that shop very successful. And if you go out and look at the industry now, all the people running the industry came from Money Store, GE Capital, CIT. Like a lot of them came from those shops, and some of them worked at both of those, Money Store and CIT or whatever.
Sure.
And I'm trying to think I will say Live Oak is doing something like that now. Live Oak started their shop in I think '08, and they've done a good job cultivating new talent in Wilmington with their headquarters and whatnot, and they've grown huge. But for the most part, 99% of SBA lenders don't have anything even close to that. All they're doing is, hiring other people that know how to do it, training them their way, and then moving on. Like, why isn't no one doing this big type of training program at their shops?
Well, I don't know if the training is the lack of training, let's just say, is really more of an SBA issue or just an industry-wide issue. But GE Capital is very unique in that they invested very, very heavily. A big percentage of their revenue went right back into training their executive staff and recognizing talent and grooming talent internally. So as you know, Ray, a lot of people know that GE in general, not just GE Capital, but GE produced more Fortune 500 CEOs than any other company in history. So
Oh, wow.
a tremendous amount of training development was conducted for all GE businesses. We even, I still say we because I was there so many years, but GE had its own university as well in Crotonville. And there was a tremendous amount of support and investment into the employees. That takes a lot of effort, takes a lot of money to train. And I think, when you look at an SBA world and tying that back to SBA, you have 1,500 SBA lenders across the country. And reality is significant majority of those companies or SBA shops are really small shops, right? I don't think you have the capacity in many of those institutions to devote that much of your revenue into a regimented training program. So I think that's probably one of the answers. But one thing that GE did very, very well was not only the training, but they were very good about forward thinking and planning, and they were very strategic on risk management as well. So you really didn't have, when you looked at GE business and when we exited, ultimately the GE Capital exited the SBA business, the portfolio was performing very, very well, and we weren't forced to exit by the SBA. We weren't in any regulatory issues, but it was time strategically that we said, hey, it's probably best for us to exit this market. But reality is, I think you have to devote, I think, a lot of energy, resource, talent development into the SBA world to really replicate something like the Money Store or CITs of the past or GE Capitals of the past. And I think that resource may be a little bit lacking with most of the institutions.
What I heard is everyone's after the quick buck and nobody wants to do the long-term investments.
Mm-hmm.
So maybe the answer is another large company getting into the SBA space that does, I don't know what question I'm trying to answer, but like, I guess to recreate that, it would take like a, Walmart SBA or something.
Right. I think it just takes a long-term view, right? I think it takes a long-term strategic view when you're, unfortunately, these days, everything is run on monthly, quarterly metrics and returns. And quite honestly, that takes precedence over investment sometimes in training and making sure you're creating the right environment for your workplace and populating it with the proper folks. And I just think it's a combination of not only having the capital to do it, but you have an investor base or you have a board who understands that it's critically important to operate the business soundly. It's not just about growth, right? It's about stability. It's about being strategic and having the patience to really think long term and invest back into the business.
You know who we should call?
Who?
Jeff Bezos.
Yeah.
Amazon SBA. If he can get a package to my house same day, like he's gonna be able to get these SBA loans closed because these things take a while.
Yeah, it does. That's one thing that I think the industry struggles with is just the processing timely close. And that's one of the things that we have invested at Velocity SBA. I don't know if you know this, Ray, but when this business was first started, we were not called Velocity SBA. Our business name was Crossroads Small Business Solutions.
I remember that.
And yeah, so I rebranded that. I recommended to the board to rebrand that once we were ready. And what I mean by once we were ready is that we really wanted to process SBA loans in a very efficient manner. And so if you take a look at our name, it's Velocity SBA. It's not two words, but it's actually Velocity SBA combined. There's no space in between. And you take the word velocity, which denotes speed, momentum. And sometimes, you take the word SBA, and the first thing that comes up in people's minds, borrowers' minds, or even bankers' minds, is that, boy, that's really cumbersome, slow. So we wanted to combine those two words, really kind of, they're opposites in some ways, right? And really come up with our mission that we are going to process SBA loans in a very efficient manner, and we're going to move at the speed of small business. And hence the name Velocity SBA. We had done a lot of work on the process management side, operational side when we launched the business. And when I felt that it was ready for us to rebrand and really execute on that, that's when we switched the name over, because we want to make sure we go to market with a brand and deliver on that message.
Yeah, and I saw that, and I'm a fan of the rebrand. So good job.
Thank you.
But how do you do that? How do to make, like your website says, process SBA loans fast and efficient? Like, how do you do that?
Well, I think it's not just one thing, right? It's a combination of things. And one thing that non-banks have, I think, that maybe a bank doesn't have, is that when you look at an SBA department, whether it's a regional or sometimes, especially so for community banks, it's just one division or one product of many different products, right? So in certain institutions, you may have a credit person looking at SBA loans, 7A loans. They may be looking at 504s. They may be looking at other deals. You have closing departments that close multiple different types of transactions. The beauty of a non-bank lender like us, we are specifically only originating 7A loans. That's all we do. So what people forget is that every one of our employees, whether it's sales, whether it's credit, whether it's closing, whether it's documentation, or whether you're finance and you're accounting or you're IT, all we do on a daily basis is work on 7A loans. So what ends up happening is that we all become experts in the 7A space. You can pick up a phone and call our accountant, and they know everything about SBA accounting, right? So we become experts. And when you have a group that is solely focused on a single product and really devote all their attention, you obviously become much more knowledgeable. And that team that you create, as long as you create an environment where it's conducive to collaboration, the things just tend to move much faster, right? So you have to have good people, you have to have expertise, you have to these days have technology to support the processing, timely processing, and more importantly, efficient processing of these transactions. And it's really a combination of all those factors that contribute to Velocity SBA's success, I guess, if you will, in the marketplace, that we strive to deliver a very efficient, seamless process for our customers.
Good work, Charles. You should be getting out more, saying this. You should be telling your BDOs how to sell.
Well, that's my favorite hat to wear. I started this industry years ago. When I first got out of college, I started as a management trainee program at a community bank as a credit person. And ultimately, I did sales. Really, the progression of my career since college was I started as a management trainee in the credit side, ultimately ran the SBA division. And after that, I went into sales at a fairly, I guess, young age. And GE Capital came calling. And I made the transition from an SBA department manager to a sales rep for GE Capital back in 1997. Was a sales guy for a number of years with GE, and did really well there. Love sales. Still to this day, I wear multiple hats. I mean, being the president of the company, one minute you're wearing the finance hat, one minute you're wearing the credit hat, and one minute you're wearing asset management hat. But the favorite hat that I like to wear is sales. That's really where my passion is. And if I could spend most of my time really interacting with folks, it would be out in the field meeting with customers.
That's very cool. By the way, so did you buy the Crossroads license, or what was the ultimate license that you bought to launch? I guess it was Crossroads and now Velocity.
Sure. So yeah, the Crossroads license is the same as the VelocitySBA license. We just simply rebranded our name. That's all. So it's the same license. But in 2015, the license that we purchased, that we hold today, was purchased from Superior Financial Group, which was a SBLC headquartered out of Northern California.
That one doesn't ring a bell actually for me. So when you acquired that license to launch your SBLC, you had to go through SBA and get the approvals for that. What was that like?
It's a pretty lengthy process. You have to submit a very, very detailed business plan, very detailed capital plan, and you obviously have to go through a pretty extensive review process with the SBA after submission, interviews, etc. And normal time frame for a transaction like that has historically been, anytime you have a license transfer, it's typically about 1.5 to 2 year process. And so
Wow.
Our investors back then started that process, I believe, in 2013 sometime, and consummated the final approval, I believe, May of 2015. So it took almost 2 years.
What is the SBA ultimately looking for from the new group?
Well, I think it's multiple factors, but obviously they want to make sure that you have a sound business plan that consists of what is your mission, right? Why do you want to be in this business? And who's going to operate it? Who are the key executives that will be coming into the business to operate the business? And they want to make sure that they are vetting those individuals out, right? And financial strength. What is your financial strength to carry the business forward? And capital requirements are very important. So they look at your investor base, and it's a very detailed look at not only the management, but your board makeup, your investor makeup, and your future plans for the business.
Are you looking to ramp up production?
Yes, we are, and we've been growing since I came in. I actually came into the business in 2017, and strategically, we have been growing at a clip of about 25% year over year. 2022 was a down year for most lenders, including us. So we did have a little bit of a downturn in 2022. But 2023, we are looking to grow, and yes, we're really in a state of business right now where I feel that we were in a startup phase, if you will, for the first 3.5 years. We've kind of entered that growth phase, and we're looking to scale the business. We're expanding geographically. We launched the Southeast and Midwest region last year, and we'll be continuing to expand geographically and really grow the business going forward. We're actively hiring. Even now, we're actively hiring to add salespeople as well as our back office, and really just executing on our strategic plan to grow.
Listen, Charles, thank you so much for stopping by. I really appreciated the conversation.
Yeah, no, this is great. Thanks for inviting me, and it's been a pleasure chatting with you.
All right, take care. All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.